There's a number circulating online that's keeping many people awake at night, people who dream of having a Tesla in their garage without having to compromise decades of savings. $12,749. That's the price being suggested as a possible launch price for the Tesla Model 2, expected to hit the market in the second half of 2026. For those living on retirement, pensions, or a lifetime savings, this number sounds like a door finally opening. It seems like a chance to trade in that old sedan for something modern, quiet, efficient, without having to take out a loan or sell a property. But there's a silent question behind all this enthusiasm, and almost no one is asking it out loud. What if the car is cheap to buy, but expensive to maintain every month for the next 5 years? Because for the American retiree, the real danger is rarely in the price tag displayed in the shop window. The danger lies in the bills that keep coming back, month after month, without making a sound. Insurance, deductible, specialist repairs, sensor windows, calibration cameras, and that inconvenient detail of the nearest Tesla dealership being 2 or 3 hours away from the city where the person lives. It's important to remember that this figure of $12,749 is not an official confirmation from Tesla. It's a number that gained traction on social media, in enthusiast forums, and in clickbait headlines. But the automaker hasn't signed any contract for that amount. Treating it as a guarantee is the first mistake a prudent buyer can make. And there's another important detail for those planning for 2026. You can't rely on the old federal tax credits for electric vehicles as if they were a sure thing, because the American political and tax landscape is undergoing changes that directly affect this type of incentive. Therefore, an honest analysis needs to ignore these hypothetical bonuses and look only at the real cost that will arrive in the buyer's mailbox every month. Imagine a 67-year-old man with a clean driving record driving less than 8,000 kilometers a year, using the car basically to go to the market, to the doctor, and to visit his grandchildren on weekends. His gasoline sedan costs about $115 a month in insurance. If the quote for the future Model 2 is only $60 more expensive, it seems insignificant at first glance, almost a minor detail in the household budget. No one sets off fireworks when they see a Toyota Camry parked on the corner. The car doesn't attract attention, it doesn't appear in futuristic commercials, it doesn't become a topic of conversation at family dinners, and it doesn't make the neighbor ask to take a picture. But for someone carefully managing their retirement, a common sedan like this can be one of the most financially attractive things in existence, because it carries a characteristic that no recent launch can offer in its first year: a long, complete, and detailed history within the systems of American insurance companies. Models like the Camry, Honda Accord, Honda Civic, and Toyota Crown accumulate decades of information about absolutely everything that can happen to them. Insurance companies know precisely how many times these cars are involved in collisions, the average cost of each type of repair, how long a repair shop takes to return the vehicle ready, and how parts circulate in the market. This accumulated knowledge creates something invaluable for a retiree: predictability. And predictability, in the budget of someone living on a fixed income, is one of the few priceless advantages, because it allows for year-round planning without fearing surprises from unexpected places. When someone scrapes the bumper of an Accord while parking, the neighborhood mechanic has probably done that same job dozens of times on that same model. If a Camry needs a windshield replacement, any glass shop has the glass in stock or can get it in 24 hours. If the Civic's door gets dented after a minor bump at the supermarket, the repair estimate might be a bit pricey, but it will rarely seem like an inexplicable mystery. The parts are common, the workmanship is standardized, the repair time is known, and the insurance company has already calculated that risk thousands of times in identical situations. A new Tesla product plays in a completely different league. Even though the Model 2 is designed to be simpler and more affordable than other vehicles from the brand, insurance companies still need to ask much more complex questions before setting any price. How much does a windshield with a built-in camera cost? How many hours of electronic calibration are needed after a seemingly simple repair? Is the neighborhood repair shop authorized to work on the car, or can only a Tesla authorized service center perform the service? Do the parts arrive in a week, or are they stuck in a waiting list at a distant distribution center for 3 months? This is where the Model 2 story starts to get really interesting and full of contradictions that deserve attention. If the car follows the direction Tesla has been taking in recent years, it will likely arrive on the market equipped with a full arsenal of active safety technologies. Cameras scattered throughout the vehicle, automatic emergency braking, forward collision alerts, lane keeping assist, blind spot monitoring, proximity sensors, and software-based systems that attempt to predict danger even before the driver notices it. All this wrapped up in an affordable package. This detail matters much more than it seems at first glance. Retired drivers tend to drive with natural caution, a result of decades of experience behind the wheel. Many drive very few kilometers per year, avoid highways at night, accelerate smoothly, brake well in advance, and maintain a comfortable distance from the car in front. In theory, this driver profile combined with a car packed with preventative technology should seem like a dream for any insurance company. A careful retiree in a vehicle that helps prevent accidents represents, on paper, a very low-risk client for the company that will issue the policy. But there's another side to this coin that nobody mentions in the flashy advertisements for new releases. The same technology that reduces the likelihood of a collision also drastically increases the cost of repairs when an impact inevitably occurs. Cameras embedded in strategic locations, windows with attached sensors, body parts connected to delicate wiring, and components that depend on electronic calibration transform any minor accident into a frightening bill. A minor bump into a pole while parking, which, in a Honda Civic would be resolved with a few $100s, can become a problem costing thousands in a Tesla. Consider a practical example that helps to visualize this difference clearly. In a typical sedan, repairing a bumper basically involves bodywork, body filler, and a good coat of paint in the original color. In a high-tech electric vehicle like the Model 2, that same area of the car can conceal front cameras, parking sensors, wires connected to critical systems, and components that need to be recalibrated by specialized equipment after replacement. The windshield ceases to be just glass when driver assistance cameras depend on it to function correctly on busy roads. Tesla has an ace up its sleeve that it's been keeping for some years, and that could completely change the bills for certain retired buyers. It's Tesla Insurance, the automaker's own insurance policy, which works very differently from traditional companies across the United States. While a typical insurer usually calculates the policy price based on broad categories such as the driver's age, location of residence, vehicle type, claims history, and in some cases even credit information, Tesla Insurance uses something much more personal in the states where it's available: the driver's actual behavior behind the wheel. This means that the amount paid each month can be directly influenced by how each person drives on a daily basis, how many kilometers they actually drive on the roads, and how the famous safety score evolves week after week. For some retirees, this proposal sounds almost like justice finally being served after years of paying high prices for no apparent reason. Imagine that gentleman who only uses his car to go to the corner supermarket, the cardiologist appointment, to church on Sunday mornings, and occasionally to pick up his grandchildren from school. He always drives during the day, rarely exceeds speed limits, avoids rush hour traffic, and never tailgates the car in front. Within a model based on real-world behavior, this driver would finally be evaluated on what they actually do behind the wheel, and not on cold statistics that treat all seniors as if they were the same generic risk group. If Tesla Insurance truly rewards smooth, low-risk driving, the Model 2 could end up being much more financially attractive than a traditional quote would suggest. That's the bright side of the promise, the one that usually appears in colorful commercials and enthusiastic testimonials circulating on social media during launches. But there's a much less discussed side that needs to be part of the conversation. The first obstacle is geographical and quite concrete. Tesla insurance is not available in all American states. Those who live in a region where the product has not yet arrived automatically revert to the traditional market, losing any advantage promised by the behavioral model. The second obstacle is the monthly variability, which is especially frightening for those who need to create a household budget with clockwork precision. A traditional policy gives the client a fixed amount valid for 6 whole months, allowing for calm planning. Tesla's model can adjust the charge as driving performance changes, creating uncertainty that weighs heavily on the pockets of those living on pensions. There's a question that needs to be replaced before any older person considers taking a Model 2 home in 2026. Most buyers tend to wonder if they can afford the car, looking only at the down payment and monthly payment. That's the wrong question, the one that puts so many people in financial trouble after 6 or 7 months of use. The right question is far more uncomfortable and requires courage to ask aloud. Will the retirement budget be able to absorb this car after the initial excitement of the novelty wears off and the gray routine of bills returns to dominate life? This is the 5-year fixed income test, and it usually unfolds in 3 quite distinct scenarios that are worth considering before making any final decision. In the best-case scenario, the rumored price turns out to be close to reality. Model 2 insurance ends up being similar to that of a regular sedan. Tesla insurance is available in the state where the retiree lives, and careful driving generates an excellent safety score. Adding fuel economy, cheaper maintenance, and manageable repairs, the car truly becomes a smart choice for the stage of life, where every financial decision weighs more heavily. In the intermediate scenario, which is usually the most common in the real world, the car remains attractive, but the insurance is a bit more expensive than that of the current sedan. Something like $20, $35, or $50 more per month, depending on the region and the driver's profile. The fuel savings help balance the scales, the reduced mechanical maintenance brings some relief to the wallet over time, and the onboard technology seems worth every penny invested. There's no gigantic savings as the initial headline promised, but there's also no concrete loss. It's a gray area where the decision depends much more on personal taste than on pure mathematics. In the worst-case scenario, the one nobody wants to face, but which needs to be seriously considered, the figure of $12,749 remains just a rumor that never materializes. Insurance companies price the Model 2 according to the same standard as other high-tech electric vehicles currently available on the market. Tesla insurance doesn't operate in the state of residence. The nearest authorized service center is 2 or 3 hours away, and a single repair involving glass, sensors, or body parts generates an unpredictable bill. In this scenario, the low price simply migrates from the sticker in the storefront to the monthly bills that arrive in the mail. Before signing any purchase contract, there are 5 practical checks that can save thousands of dollars and sleepless nights for anyone considering adopting a Model 2 as a retirement companion. The first seems obvious, but almost no one does it right. Request a real insurance quote using your full name, the exact zip code of your residence, your true driving history, and all the personal details that matter for the calculation. National averages published on generic websites only serve to create a false sense of security, because the value that appears in a report rarely corresponds to what will arrive in the mailbox later. The second verification involves an honest exercise of direct comparison with what is currently being paid for the vehicle in use. The true reference number is never a statistic published by a specialized magazine, nor an estimate released by an internet channel. The number that matters is the one printed on the current policy, the one that is automatically debited from the bank account every month. If the old sedan costs $115 a month to insure, and the quote for the Model 2 reaches $170, this difference needs to be looked at honestly. Multiplying by 60 months gives a concrete idea of the real impact over 5 years. The third verification requires specific and detailed questions for the insurance broker, even if they seem awkward or overly technical at first. How exactly does collision coverage involving a modern electric vehicle work? Is there a special limit for repairing windows with built-in sensors? Does the policy fully cover the costs of electronic calibration after a seemingly simple repair? Are components related to cameras and driver assistance systems included in basic coverage, or do they require an additional package? Each of these questions can reveal an unpleasant surprise hidden in the fine print of the contract. The fourth check is purely geographical and is often ignored by those who are dazzled by the idea of having a Tesla in their garage. Check with a map open and a stopwatch in hand exactly how far away the nearest authorized service center is. Some American cities still depend on repair shops located 2, 3, or even 4 hours away. For a retiree who may need to leave their car parked for an entire week, waiting for a specific part to arrive from another region, this distance becomes a real problem that affects medical appointments, grocery shopping, and the very autonomy gained with so much effort throughout a lifetime. There's a silent truth that spans decades of financial experience for those who have reached retirement with some preserved assets. The cheapest car at this stage of life is never the one with the lowest price tag displayed in the dealership's gleaming window. It's the one that causes the fewest unpleasant financial surprises over the months and years. This simple rule has survived all automotive fads, all technological innovations, all the brilliant promises made by manufacturers over the last few generations. And it continues to hold true exactly now, in the second half of 2026, with the Model 2 hitting the streets. A vehicle truly suited to accompany someone in retirement needs to fulfill a much deeper mission than simply transporting people from one address to another. It needs to actively protect the carefully built household budget, reduce the level of mental stress caused by unexpected bills, maintain the independence gained after a lifetime of hard work, and avoid financial surprises that a fixed income simply cannot absorb without pain. These 4 pillars form the invisible tripod that supports any intelligent automotive choice at this specific stage of life. Ignoring any of them usually ends up being much more expensive than it seems. The Model 2 only wins this silent battle if it manages to fulfill all these pillars after the purchase is finalized, never just before. The enthusiasm generated by the attractive price, the modern design, the silence of the electric motor, and the genuine feeling of stepping into the future has a very short lifespan. It lasts a few weeks, perhaps a few months, for those most excited about the technology. After that, the reality of monthly bills, specific deductibles, trips to the authorized service center, and specialized repairs takes over the retiree's silent routine. It is at this moment that the truth appears without any mask. $12,749 is a genuinely exciting number that could rewrite much of the history of affordable electric vehicles in the American market. It could become one of Tesla's most successful calls to action, targeting a different audience than those who traditionally buy the more expensive models in its lineup. But for a driver living on a fixed pension, excitement alone has never been a sufficient argument for a decision of this magnitude. The truly decisive question remains whether the car can protect the monthly budget after purchase, considering insurance, deductibles, distance to service, complexity of repairs, and 5 whole years of daily use.